Hello, my name is Keith Redding. I'm the Senior Director of Research here at Morguard. I'm pleased to introduce the 2025 Canadian Economic Outlook and Market Fundamentals Report. The report provides an in-depth analysis of Canada's commercial real estate market, examines the economic drivers that influence market performance, and highlights key investment trends to watch in 2025. Rent growth moderated in 2024 as rental demand softened. Multi-suite residential rental property construction completions reached a multi-decade high. Rents remained at record high levels for all unit sizes. In the first half of 2024, property investment performance steadied as values stabilized across the broader market. Investor sentiment with regard to property acquisitions remained strong, which was consistent with the trend of the past few years. Looking ahead to 2025, demand is expected to outpace supply as investors seek acquisition opportunities in a sector with attractive prevailing yields and a positive long-term outlook. In 2025, balanced rental market conditions are anticipated as rent growth moderates. Retail leasing market conditions tightened, resulting in higher rents for high-quality space. Leasing demand has remained robust in suburban locales. Demand for space in the country's most productive shopping centers and community strip centers outpaced supply as national and international retailers continue to expand their brick-and-mortar portfolios. A range of new retail offerings, concepts, and formats have been introduced across the country. Retail property values stabilized, resulting in improved investment performance. Looking ahead to 2025, investment market activity is expected to increase. Retail leasing market conditions will stabilize, supported by a balanced demand-supply dynamic. Office leasing market demand remained muted in 2024, continuing the recent trend. Tenants targeted built-out sublease space that could be occupied relatively quickly to avoid the high cost of construction and moving. In 2025, office property investment sales are expected to increase gradually as investor confidence levels rise and lending market conditions improve. Industrial leasing demand softened recently due to the combined effects of higher interest rates, inflation, and reduced domestic demand. Consequently, availability increased, driven in part by ongoing new supply deliveries. High-quality warehouse and logistics properties with stable tenants on long-term leases remained a preferred investor acquisition target. In 2025, industrial investment property sales are expected to continue at a relatively brisk pace, with investors exhibiting confidence in the market's fundamental outlook. Industrial property values are projected to rise, positively impacting investment performance. Canadian economic growth is expected to remain moderate in 2025, supported by the continuation of the interest rate cutting cycle, increased consumer and government spending, and a healthier business investment trend. Economic activity is anticipated to rise modestly as domestic demand gradually strengthens. Housing market activity will strengthen in 2025, driven largely by lower mortgage rates and household income growth. For more information and analysis, please visit morguard.com/research.